the USOIL spot. And so far this week, we have been doing very, very well on the USOIL spot. Remember, the week started on a very sluggish note where we saw price consolidating within a range that is between the 85.15 level and the $83.80 level for the major part of this week before we saw the breakdown happen on Wednesday, which of course we did took advantage of, giving us about 200 pips in profit from that sell position alone. However, yesterday we noticed that price action appeared to have come back to retest the ascending trend line we spotted during our live session on Monday. Now, to give you a quick review of what things are looking like and what's projected, the idea that we might likely be seeing a bullish momentum in the last couple of days. Now, the first thing we noticed at the beginning of the week was this descending trend line we spotted here, and in fact at the beginning of this week we saw our price did break out of the descending trend line, and we saw the transition of price action into a consolidation phase, going back to retest the trend line that was broken, and the appearance of buy pressure above this trend line was all we needed to get ready for an opportunity to buy. And during our live session yesterday, remember that we acknowledged the $83.15 level where we said a breakout of structure will be welcoming buying opportunities in this particular market. Now, during yesterday's, the market experienced a failed rally, which can be attributed to the immediate reaction to the US government's report of a record high production in stockpile for last week's production period. However, it is worth noting that the price action has managed to find support around the $81.50 level, as you will be seeing right here. So let me give a visual representation here so we can see the $81.50 zone here. Remember, we had a buy position yesterday. We saw the bearish traction bringing price back into that structure. Now, the inability of price action to break down that $81.50 level is a red flag that this area could be serving as a strong platform for an uptrend continuation. And with the look at what happened here on Thursday morning, we saw that sellers found it difficult to break through the structure, and during the New York session yesterday we saw buy pressure resume around that area, and as a result of this I labeled that zone a temporary demand zone where we shall be looking out for uptrend situation go on here. Now, in the last 1, 2, 3, 4, 5, 6, 7 hours, we have seen bullish traction resume around that area as price action has broken out of very important levels such as the $83.15 level, which we projected here yesterday. We had the $83.80 level broken to the upside. We also had the $84.35 level broken, and right now price is gradually approaching the $85.15 level. Now, for those who are taking advantage of this bullish opportunity here, you will currently be running with a minimum of 1, 2, 3, 4 positions at this point in time. Now, if we look at the number of pips here, the first position will be running with about 280 pips in profit. The second position about 190 pips. That's a total of 470 pips. Then we also have the third position running with about 120 pips, giving us roughly 700 pips right now, and about 74 pips on the last position here. So we currently have about 800 pips running in profit just in the last 24 hours. So that's quite a phenomenal feat right here as we head towards the end of the week. Now, for those who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we want to be doing right now, of course, whenever price moves considerably well in our favor, we want to be moving our stop losses to secure the current buy position. And to secure our positions here, we do want to be moving our stop losses to anywhere between the $84.30 level and the $83.50 area. Let's give enough room for price action to breathe while we continue to monitor price action from this area. Now, with a well secured position at this juncture, what is going to be our next line of action for today? I'm of the opinion that because of the assurance by the what's it called, by the Saudi Arabia led OPEC Plus bloc, I'm of the opinion that we are likely going to be seeing an uptrend scenario, as we have confidence from them that they are making sure that there is stability in the supply of crude oil across the globe. And if there's going to be this positive assurance and there is a reflection of supply in the market, then there is going to be a more bet on the US oil spot so far. But from a technical standpoint, let's see what we are going to be planning ahead of today's New York session. Now, the first thing I would like us to do here is to look at the structure from an holistic standpoint. Now, looking at the structure here, I'm beginning to see something like a reversal pattern here in the form of a double bottom structure, where that level at the $83.80 level, a level which was initially our support line at the beginning of the week, will be serving as the neckline of this structure. Now, with the neckline identified here, a breakout of the structure is definitely going to be affirming and validating that double bottom structure has a reversal pattern. Now, we already saw the breakout of the structure happen about 3 hours ago, and right now this has validated the reversal pattern, and I'm of the opinion that we will be maintaining a bullish bias on the US oil spot today. However, for those who had missed out on this opportunity, what is going to be our plans to be part of this uptrend move? Well, since we have a neckline here at the $83.80 level, from a technical standpoint, when price breaks out of the neckline of a reversal pattern, we expect that some point in time we are likely going to be seeing price retrace back into structure to inside an uptrend scenario. Now, let's see if the market will come back into structure and retest it. If it comes back, then we do want to be getting ready to join an uptrend move. However, if price refuses to drop back into the neckline and instead it continues to find higher highs and higher lows, then a breakout retest of the $85.15 level will be welcoming more buying opportunities in this market. Now, for those who are joining us for the first time, I will encourage you to exercise patience and wait for a retest of the $85.15 level to join that uptrend move. However, for those who have been part of this profitable journey since the beginning of the week, then you can afford to leverage on the profit we have made so far this week to test waters above the $85.15 area. So in that regard, you can afford to have a buy stop order above the structure. So in case it doesn't work out, you know that you're only risking some of the profit you've made so far this week and not touching your real portfolio at all. But for those who are joining us for the first time, please wait for a retest of structure as soon as the breakout of the $85.15 level happen. So on the US oil spot today, we maintain a bullish bias, so we continue to look out for market conditions that will support the idea of buying this asset for today's trading session. So these are my views here on the US All Sports this morning. So if you have any questions or you need me to do some further clarifications or shed more light to an aspect here, feel free to let me know in the comment section